Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities traded higher across markets on region-specific developments. US equities rose, driven by declining bond yields after the selection of Scott Bennett as the next US Treasury Secretary boosted market sentiments. Further, data released during the week also showed that US GDP grew at 2.8% year-on-year in the third quarter of 2024, boosted by strong consumer spending and a surge in exports, suggesting that US economic momentum remains strong. Asian markets remain under pressure, dragged down by Taiwan, Philippines, and Korea, which recorded a decline of 3% each, driven by foreign investor pullouts, while markets like India, Hong Kong, and China outperformed with gains of nearly 1%. Back home, Indian equities gained for the second consecutive week. After trading mixed at the start of the week, the Nifty index fell sharply on Thursday as foreign investor outflows picked up pace, but recovered next day to end the week with a weekly gain of 0.9%. Broader markets outperformed Nifty, with the mid-cap index up 2.5%, while the small-cap index gaining 5% over the past week. Coming to sectors, capital goods and telecom were the best performers with gains of over 2.8%, while IT and autos were the worst performers with cuts of over 0.4% for the week. The Indian fixed income market had a relatively much better week, with Indian government bond yields edging lower across the curve, driven by declining US bond yields after the announcement of the next US Treasury Secretary and a slower than expected second quarter fiscal year 2025 GDP growth data drove market expectations of a potential RBI policy rate cut in the coming December policy meeting. The 10-year Indian government bond yield fell 13 basis points to close at 6.74%, while the 3-year and 5-year yields changed by 8 basis points and 13 basis points respectively for the week. In commodities, INR gold fell by 1.5%, Brent crude oil fell 4% for the week to close at $72.9 per barrel, driven by easing concerns over supply risk from the Israel-Hezbollah conflict and the prospect of increased supply in 2025, even as the OPEC and allies are expected to extend output cuts. The INR closed marginally lower against the US dollar to close at 84.49 per dollar as the impact of lower US bond yield, weaker US dollar, falling crude oil prices were negated by the month-end dollar demand from importers. Coming to the macros update for the week, the only data that got reported was on India's second quarter fiscal year 2025 GDP growth, which moderated to a 7-quarter low of 5.4% year-on-year compared to 6.7% growth recorded in the previous quarter. This was much lower than market expectations of a 6.4% growth. Nominal GDP growth came in at 8% year-on-year compared to 9% growth recorded in the previous quarter. From the production side, the growth in real gross value added dropped to a 7-quarter low of 5.6% year-on-year compared to 6.8% growth recorded in the previous quarter, mainly driven by manufacturing growth falling to a 6-quarter low of 2.2% and muted mining growth. Construction growth also declined by 2.8% to 7.7% year-on-year, owing to weaker than expected public capex. Agriculture sector was the silver lining this quarter, where the gross value added growth increased to a 5-quarter high of 3.5% year-on-year compared to 2% growth recorded in the previous one. Services growth remained steady at 7.1% year-on-year as retail trade, hotels and transport sector growth increased, offset by a decline in financial services and real estate. On the expenditure side, private consumption growth declined to 6% year-on-year growth recorded in the previous quarter. Fixed investment growth declined to 5.4% year-on-year compared to 7.5% growth in the previous quarter. This was also followed by a 4.4% growth in government consumption year-on-year compared to a decline of 0.2% in the previous quarter. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, Reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.